I know why you clicked into this video. You're just a busybody, isn't it? Just joking, by the way. So I too am particularly interested when other YouTubers show their vulnerabilities and also share some sort of a portfolio update frequently, because I do appreciate the transparency and I do respect them for putting themselves out there, because who knows how the market is going to react, regardless whether is it short-term or long-term in nature. So in comparison, when YouTubers are transparent, they cannot ride onto that bandwagon and say that they earn a huge boatload of sum of money when the stock moons. And inversely, when the stock craters, they cannot say that, oh, I only have a small exposure, because everything has some sort of a digital record. And I do believe that some of you might actually be screen recording it as well. So I'm perfectly fine with you keeping track of my track record, and all I need in return is just to help gently smash that cute little like button. There is actually a limited time bonus in lieu of celebrating Mumu's 10th year anniversary. So if you open an account and deposit any amount on Mumu, you get an extra $10 on top of the other welcome rewards, which might be worth up to 190 Singapore dollar if you deposit minimally 2,700. So Mumu is a great platform for you to trade and also invest in the stock market, and they have been a solid partner for my own investing journey thus far. Currently, I know it's the big tech earnings season, and many of you are losing sleep over it because these big tech companies essentially set the tone for the rest of your portfolio companies. So fear not, in Mumu's native app, you can actually keep track of all these different earnings via their earnings calendar and be kept in touch via the notifications. Of course, for those of you who haven't signed up, don't let welcome rewards worth up to $200 go so easily. I'll leave the link in the description down below. For my US and also Australian viewers, Mumu is also running aggressive reward campaigns, giving out free stocks as well. Just make sure to click on the correct link below. Thank you Mumu for sponsoring this video. Now, to put things into perspective, let's see what this clown actually did when Alibaba and Tencent and the whole Chinese stock market actually crashed. You can see that these are the last updated figures, where Alibaba was actually trading at $81, KWEB was around 24, Tencent was around 35. So those are good old times, isn't it? So just 1 month after, you can see that the share price essentially collapsed on itself. I think Alibaba is trading closer to 60, KWEB is probably under 20. And oh, just so you know, for Alibaba specifically, I do own both the US and Hong Kong shares itself, and I just essentially prorated it all to USD, so for easier comparability sake. And similarly for Tencent, I own all Hong Kong shares. I don't own over-the-counter for Tencent on the US exchange. So as you can see, based on Q3 2022 update, my P&L is around negative 36%, and I'm down on an absolute basis around 22,000 USD. And if you were to just compare and attribute the loss, most of the loss is done by Alibaba. Alibaba stands around, I think this is 90% of the absolute level of loss. And Alibaba currently sits at around 66% of my entire portfolio. And if you were to add it and just weight all of them together, if you just add up these three positions, this actually works out to around 86 to 90. I would say give or take 85 to 90%. And these three, KWEB, Alibaba and Tencent, all these are Chinese tech companies. So yes, I still have a huge inclination towards Chinese tech specifically, and yeah, a majority of my stakes are in Chinese equities. So yes, when Chinese equities tank, my portfolio will tank alongside. So on top of the previous portfolio update, I wanted to kind of do a portfolio review where I attempt to objectively look at all the current positions that I have, and to really identify and benchmark many of all these so-called popular financial metrics such as ROE, return on equity, return on invested capital, the free cash flow yield, PE, EV, EBITDA, etc, etc. So this is not the focus of today's video. Instead, this will probably be in a portfolio review update-ish kind of video subsequently. And of course, because of all the revaluation in pricing in most of these stocks today, we will see a difference in terms of PE, free cash flow yield, etc, etc. So I will have to update these figures again because these are all accurate based on those current valuations. Now, I know the suspense is killing you guys, so let's get right into it. So this portfolio is accurate as of 29th of October 2022. So just to give you a bird's eye view of the portfolio today, Alibaba, Tencent and KWEB still remains the biggest portion of my portfolio because I did add to my Alibaba and Tencent position. So for now, they actually increased from 85 to currently I think around 88%. And this small graph here essentially just shows you the breakdown. And Alibaba, despite it being the biggest, I continue adding to it, as you can see, because you can just do a simple comparison. And my Alibaba position, I think, in terms of exposure of USD or the US share equivalent, I increased it by around 120 shares. Tencent, I bought around another 200 Hong Kong shares. And for KWEB, it's just a normal dollar cost averaging strategy. And for those of you who are new on this channel, I do adopt a DCA strategy on the two ETFs, which is KWEB and Vanguard Total. So I probably don't have a good reason to stop it anytime soon. So I'll just continuously plow in money for the foreseeable future, even until I retire maybe, who knows. But anyhow, if you look at the different positions, so I understand that Meta has essentially created as well. My previous Meta position, I was down around 29%, and today it's down around 47%, and it's crazy. We are living in crazy times, but I'm currently still sitting on the recent earnings report that was posted by Meta and really trying to digest how the market is reacting to their current earnings report and the projections moving forward, because as you all know, the stock market is always a forward-looking machine. So whether will I continue averaging down or not, I think I'll leave you guys in suspense again. I'll probably be making an earnings report, a reaction video or something, or some sort of a summary to kind of crystallize my thoughts as well. And I kind of realized that the YouTube channel is a good mechanism for me to stay accountable, because I kind of analog my thought process methodically, and there is some sort of accountability at least on this side, compared to being a private investor and I just buy and sell whenever I feel like it. So for all the eagle-eyed viewers out there, I did add to my TSMC position, albeit not big. I increased my exposure from 1,000 to around 1,400. So that's $400 buy-in, not a lot. Even for Amazon and Google, my current cost price is $300 each. So it's really not going to move the needle in my portfolio. So even if Meta 2x from here, it's not going to move the needle in my portfolio. Because as you guys have known, 90% is in Chinese tech. So if Chinese tech tanks, or if Chairman Xi does something again, or if investors are stirring on the Taiwan war again, then my whole portfolio will tank alongside. So as of the time of this recording, my P&L has deteriorated to negative 40%, and on an absolute basis, I'm down around 31,000. And like I said, Alibaba makes up the bulk of the loss. It's around probably 80%, 80 to 85% if I'm not wrong. So just some context of what I've been doing for this year, at least for the past 10 months. You can see that in this green column, I actually do document down every single buy decisions or sell decisions of my portfolio. Sadly, I've been only buying. I haven't really been selling any position, or for that matter, I haven't sold any position in 2022. And you can see that my KWEB DCA has started, I think, in the later part of last year. So every single month, even though it might not be the same day, but I've attempted to adopt a DCA strategy for KWEB, and I started DCA into Vanguard Total as well, starting from March. And yeah, just to keep myself accountable, you can see that this is all my buying decisions since January of this year. KWEB, Meta, VT, KWEB. I did buy a little bit of Amazon, I did buy a little bit of Google, but those are really small positions, TSM along the way as well. The three new additions that I bought just after the Hang Seng crashed, or at least I should say after the party congress has ended during the weekends. On Monday, I think the Hang Seng and basically Chinese tech crashed because it was essentially a vote of no confidence from international investors. And in case you guys think that I'm smoking you, this is just a screenshot of what I've purchased. I think back in Monday or Tuesday, if I'm not wrong. So for KWEB, because it's trading in the US exchange, I think I bought it on Tuesday Singapore time. And Alibaba and Tencent, I did it on Monday itself. So this is 1,000 shares of 9988 at $62, and it's filled. And Tencent similarly 216, 200 shares. So as you can see, I did increase my Tencent exposure from around 4,400 at 100 Tencent shares to 300 shares at around 10,000 USD. And comparatively for Alibaba, I believe you guys know that Alibaba on the US exchange and Hong Kong exchange, they have this 8-to-1 ratio. So 1,000 shares, you divide it by 8, it's around 100 and I've forgotten. So 1,000 divided by 8, that's around 125 shares. So if you have to add 317 with 125, that's around 442. So I do hope that my math checks out. If it's wrong, please remember to ping me in the comment section down below. I don't want to be reported for fraud accounting. So like I alluded in my previous video, I will always be a net buyer of stocks, at least for the foreseeable future, in the probably next 30 to 40 years. So I'm probably excited for share prices going lower and lower. But that said, don't be too caught up into your own positions and don't think that you are always picking the right companies, because I do understand that we can be wrong from time to time. And this is in no way an endorsement of asking you to follow my footsteps and go into all in on Chinese tech as well. I'm just putting where my mouth is at, and I do think that there's a huge amount of potential at current valuations. And I'm investing based on my own risk profile. So if you're uncomfortable, the door is right there. Please feel free to show yourself out. With that, I'll see you in the next video, but more importantly, I will see you on the moon. Goodbye!